Tuesday's market closes were mostly higher in the grains and in the cattle futures. Milk closed mixed. Well, Bryan Doherty is joining us with Total Farm Marketing with analysis. Bryan, I want to start off talking about the wheat market. It was the price leader on Tuesday. Is that short covering because the funds are so short, or are we seeing a weather problem start to push that market?
You know, uh, yes and yes, both. You're seeing short covering, and I think you're seeing a weather market that may have developed enough here lately to suggest that maybe the peak of crop production expectations is already behind this year's crop. The wheat council in Kansas last week found some mite issues for sure. That's concerning, but now you've got too wet of conditions in parts of the Midwest. There's some disease issue, or at least talk of it, that starts to come up. So unless things make a real strong 180 and the yield numbers out of when the combiners run north tell us differently, it's likely we're going to see some downgrade, as we saw in weekly crop ratings, to the yield potential. And with prices at 5 year low levels, Kansas City wheat hitting 5 year low level this month, this is a really good bargain to end users. Remember, there's still a war in Russia and Ukraine, despite talks. There's problems in China with weather for their wheat crop, well over 100 degrees forecasted again. And consequently, we're starting to see, well, I think both bottom picking, short covering, and just the idea that farmer selling is going to be somewhat slim at these price levels.
Mm. So is corn just following wheat higher here? Are we seeing short covering there as well?
Well, great question, because when you have a day where you have both higher, right, and finishing near the high of the day, there's the question, well, who's really what's leading, right? And I'm going to
Hmm.
say it's both. Corn has its own issues. We expected a big, strong planting number. We see that, but now what? Now you've got to get these acres that are sort of saturated. You've got to get those planted. That's not going to happen too timely. You're going to see continued issue or concern in the drier regions of the West. Although great rains fell this week in most of those regions, the longer range forecasts continue to suggest could be critically hot and dry this summer. You're talking about, and I'm careful to be not don't fall in love with these, but you're talking about an 89-year drought cycle this year. Sunspot activity is on the rise as of late. All of these things where the trade looks at a very, what I'm going to call, attractive price for end users to gobble up inventory before you even get to the growing season. I think you're going to see a lot more interest in buying corn on dips. The market tried to push down, it tried to dump out into those lows from earlier in the year. Didn't happen.
We had strong closes yesterday. Today, a strong close. What's the next technical objective, or how high do you think we can go from that perspective?
Right. So without getting too far over our skis, we're still in a range bound market, but I do like the closes. But if we go, let's take a look at the old crop contract. We had to get July back above 450. That's encouraging. There's resistance at the 200-day moving average around 461. But if we look at just a common sense retracement, you're looking back into that 475 area, and that's probably where farmers start to pick up selling again. As far as the new crop is concerned, boy, if I'd be a kind of, this week at least, I'd be a stingy seller and say, I think we need to see move back into that 475 area that we saw in February before we're going to see farmers very interested in selling. There's just too much uncertainty and cost with growing this crop to get too far over our skis and sell small rallies. I think farmers are going to be patient and wait for at least that 475 area. There's some resistance up in there in the charts. But kind of keep in mind, we also have to have an open mind that if the USDA yield estimate is too high initially, and there's some weather concerns, we could see a real flip in the fund money. That is the managed money, which has been mirroring 2023, going aggressively short into this time window. But if we have some weather concerns or events, we could quickly see a turn. And I'll remind all of us that in 2023, the market went from near $5 a bushel December corn to well over $6. It did fall apart quickly, but we did get that rally into June.
Yeah. So soybeans tried to follow corn and wheat today, but have been kind of lagging. Let's talk about some of the, I guess, the headwinds that we're facing in that bean market right now.
Well, the headwinds are world trade, world demand. Can China do without U.S. beans, et cetera, et cetera? And then, of course, the renewable fuels, and where does that all of that stand? And will that, will the renewable fuel obligations be met, or will we have to shift gears into that complex as well? So, from a big picture perspective, I think the beans have headwinds on just ample world inventories. That being said, you have some weather developments there. Not only in the US, you still got to finish planting the beans, but you have to have good weather. But the USDA is aggressive in their yield models for the upcoming year. But there's been some significant flooding issues in parts of Argentina, the world's largest exporter of soybean oil. So there's some support that's been brewing there. The bean market with lower acres this year doesn't have a lot of room to air. And so it's kind of exciting to see a market that has some push under it. Now it needs just a catalyst to get the next leg moving higher and get November beans back into the $11 plus area to start to make it attractive for farmers to think about selling.
But it seems like part of the rally was driven by the bean oil market. And can we get bean oil to recover here until we get more certainty about biofuels policy?
I think that was the big, let's call it the big negative in the marketplace, where all of a sudden the EPA said, "Hey, we're going to push this back. We're going to have our listening sessions. We're not going to rush to whatever language they used." The issue, and we talked about this, of whether it's a budgetary concern. We don't think that it is. It's just the renewable obligations. Will that come in at 5.25 billion, or is it going to come in something less than that? The market took a real hard pause when it didn't see the news that it wanted, but it's not final news, so we don't know yet. But I think from an optimistic viewpoint, the idea of cheaper fuels. Administration's talked about this. I think that plays right into the bigger picture perspective of supporting agriculture, good available cheap products to the consumer. I don't know why we wouldn't see that. And if that is the case, that is the RVOs. If we do see that, it just puts this bean crop in such a sensitive area. I can't underscore enough that when the USDA came out with the last month's USDA report, that you've got a carryout number that's just too thin for air at 52 bushels an acre, or 52 and a half, I think they had. There's just not a lot of room there. Well, we could be under 200 million bushels and carry out almost overnight in a weather event. That that pushes beans a lot higher than even $11.
Yeah. So the cattle market has been trying to consolidate the last 3 days off those bearish key reversals, but we have not negated that technical damage yet. Will we?
We have not. Will we, is the $64 million question, because the cash market currently says that we will, and that the trade will come in and buy. But the surprising thing is we haven't seen it. We've seen some attempt at recovery here, but that bearish key reversal at the very, very top of the all-time high prices at the top of a market really looms large. And if you don't see the market come back and negate that pretty quick, it sits out there larger and larger. And I have to remind myself often, and I'll remind the listeners, that the June futures contract is the expected price at the end of June on cattle, not today's cash market. So cash needs to hold up. I think the big test will be in the couple of weeks ahead, whether or not we see weekend disappearance for Memorial Day and then Father's Day buying, really scoop of inventory and keep supplies tight, or if the consumer is starting to back away from this and going, we just can't keep pushing, into high beef prices with our budgets. When I say that, I'm talking about things like credit card defaults, all-time new highs. So it's a market that I don't think can create new demand channels at the current price levels.
And let's end up talking about class three milk futures. We had a pretty good rebound after the tariff delays, but we've kind of stalled out here now. Why?
Yeah, great rebound, fast rebound, lots of volatility, a market that is giving all kinds of mixed signals. We saw the global dairy trade off a little bit today. Last global dairy trade announced we saw was very supportive. Saw that we're moving things around the world. The milk market, it seems, over the last several years, the cheese market in particular, kind of gets to a point where a little bit oversupply and prices sag and sag, and we wonder, geez, why aren't they buying this hand over fist? And then all of a sudden it happens. And when it happens, it's like a rubber band snapping. It just blows up and the market moves higher. But if you take a look at the recent lows in the last 6 months, the recent highs, and you kind of split the difference, we're about right in the middle, about where it should be. And so the next milk production report that we'll see will probably again confirm that we have enough inventory coming into the pipeline that unfortunately it likely limits rally potential into the 19s and maybe 20s. To really get a push beyond that, we'd have to see something that would indicate this herd is really contracting. This is a personal opinion, of the opinion that with beef prices where they are and calf prices where they are, you're not going to see a dairy herd contract, as the producer really wants to get those beef calves on the ground and take advantage of that.
Okay. Thanks so much, Bryan Doherty with Total Farm Marketing. That's Markets Now.